Your realtor might help you find a cute kitchen and a backyard for the dog, but do they know how to save you $50,000 or more on your mortgage without touching the sale price? Probably not. The truth is, most people, including some realtors, are missing out on one of the biggest opportunities in today's market, negotiating seller credits to buy down your interest rate. And when rates are this high, every 1/4% saved feels like a miracle, or at least a couple fewer just ramen dinners each month. So in this video, I'm breaking down 2 killer ways to negotiate seller credits that could lower your mortgage payment without costing the seller a dime out of pocket. Hey, if we haven't met yet, I'm Ashur Benjamin, a loan officer, former teacher, and a professional deal saver. I help buyers and realtors get creative when it comes to closing, especially when rates or budgets are tight. I've worked with first-time home buyers, investors, and people who almost gave up on buying until they saw what was possible with a little strategy and some well-placed credits. All right, let's start with the first option, which is a permanent rate buy down. This is a classic move that almost no one talks about because it's not flashy, it's not sexy, but it works like a charm. Here's the deal. A seller credit can be used to pay a discount points upfront in closing. In exchange, the lender lowers your interest rate permanently. Think of it like paying for lifetime access to a lower payment. One discount point costs 1% of the loan amount, and it may reduce your rate by about 1/4%, depending on the market. So let's say you're buying a $400,000 home. If you negotiate a $6,000 seller credit, you could lower your rate from 7% down to 6.5%. That means your monthly mortgage payment drops from $26.61 down to $25.28. That's $133 a month saved every single month for the next 30 years. Do the math, and that's nearly a $48,000 savings just by asking for the right credit. And here's the secret. Sellers are more likely to give a credit than reduce the price. A $6,000 credit hurts way less than a $10,000 price cut, and you get way more bang for your buck that way. So instead of saying, can you lower the price? Try seller to credit buyer $6,000 toward discount points to permanently reduce the buyer's mortgage interest rate. Feels official, right? That line alone could buy your family a vacation every year for the next decade. Now let's talk about the newer, trendier, short-term relief option, the temporary buy down. There are a few options with this. You have a 1-0 buy down, a 1-1 buy down, a 2-1 buy down, 3-2-1 buy down. Today we're just gonna talk about a 2-1 temporary buy down, but everything we talk about applies to the other ones as well. So what you need to know is that a temporary buy down is the real estate world's version of training wheels. It's perfect for buyers who need a soft landing. Here's how it works. You still negotiate a seller credit, but this time it goes into a special account that helps cover part of your mortgage payments for the first 1, 2, or 3 years. In this situation, because we're talking about a 2-1 buy down, it's gonna cover a part of that mortgage payment for the first 2 years. So when we're talking about a 2-1 buy down, that 2 represents how much interest you're gonna save in the first year. The 1 is gonna refer to year 2, where you're gonna lower 1%, and then in year 3 and beyond, it goes back to normal. So in year 1, your interest rate is 2% lower, year 2, your interest rate is 1% lower, and year 3 to 30, it goes back to normal. So let's say you lock in at 7% on a $400,000 loan. In year 1, your payment is based on a 5% rate, which is $21.47 a month. In year 2, it's gonna be based on a 6% rate, right? 1% lower than that 7% we locked in at, which means your payment's gonna be $23.98 a month. And then at year 3 all the way to year 30, you're gonna go back to full rate, which is $26.61 a month. Total savings over the first 2 years, about $9,300. And here's the best part. This can give you more room to refinance later if rates drop. It's the ultimate get in now, breathe later strategy. To make it happen, just add a line like this to your offer or your addendum. Seller to pay up to X dollars towards temporary interest rate buy down, e.g. 2-1 buy down, credit to be applied towards subsidy account. Your lender will calculate the exact costs and you're off to the races. Now, this isn't for everyone, and if you're planning to stay put long-term, a permanent buy down might save you more. But if you're expecting a raise, if you're expecting to refinance within the next year or 2, or you're just nervous about stretching your budget, this can make a huge difference early on. All right, let's simplify this. Permanent buy down, you're in it for the long haul. You want the lowest monthly payment forever. Temporary buy down, you need some breathing room now, and you plan to refinance or possibly earn more later. Either way, just know you're not stuck with whatever rate the lender or the bank gives you. You do have options. And the best part, these credits aren't coming out of your pocket. They're negotiated in the deal, often during inspections or price discussions. It's money just sitting there waiting to work for you, or get wasted on a broken dishwasher repair you could have handled yourself. So the next time you hear someone say rates are too high, you can say, not if you know how to negotiate. These strategies can save you thousands, but only if you know how to ask. And let's be real, most lenders aren't bringing this up, and not every realtor is thinking like this either. But now you know better. If you're looking to buy and want someone who can help you structure the deal strategically, or you're a realtor who wants to offer more value to your clients, let's connect. Click the link in the description or the pinned comment to book a call with me. There's no pressure, no fluff, just real options and smart advice. I'm Ashur Benjamin. I'm your mortgage guy with the plan and the punchlines. Hit like, subscribe, and share this with anyone who's house hunting right now. Trust me, they'll thank you when they're saving over $100 a month on their mortgage.